Why most traders get it wrong when it comes to adding to losers. And we'll go to the charts to look at the E-Mini NASDAQ futures. Let me take you to this week's NinjaTrader Charting Edge. Well, first day of the year is in the books, everybody. I wanted to pull up the E-Mini NASDAQ 100 futures here on the daily. Same old with the indicators. 20 period, 3 standard deviation Bollinger Bands. Red is the 10-day simple moving average. Gold is the 20-day simple moving average. What I did here was highlight the first day of the year. The open, the low, and the high. Why do I do that? I believe that the first day of the year signifies something important for at least January and potentially throughout the rest of the year. Where we open the year, a lot of times can set the tone for at least what we'll do for, who knows, days, weeks, or months. And a lot of times this day will come back into play as an important area throughout the rest of the year. So currently, I'm short the E-Mini NASDAQ. Now you could use the E-Mini Micro NASDAQ futures for this as well, because it's actually a pretty wide area that I'm looking at for execution. Now, why am I short? Well, let's take a look at the E-Mini NASDAQ first day of the year. We opened up right around 16,355 and we made our range. And what I did was I highlighted that, like I said, with the 3 horizontal lines, and it's shaded out. That's what the first day of the year is. What I noticed was you had the Bollinger Bands, which I've talked about so many times, right, everybody? When the mouth of the Bollinger Band is open and we're going up and we're holding above the 10-day moving average, I like to be long. When the mouth of the Bollinger Band is open and we're going down below the 10-day moving average, I like to be short. When the Bollinger Bands are closed in and pretty much flat like you see here, that really tells me that we're just a two-way trade. So it's really more of a neutral look. But with the first day of the year opening, staying below the 10-day moving average, which right now comes in around 16,367, getting below the 20-day moving average. And you can see on this day right here, as we're recording, we tried to go back up and get in the range of the first day of the year, and it couldn't do it, and we got back below the 20-day moving average. That to me triggered a short. I always say, where am I wrong? Know where you're wrong before you're getting in. Well, the open for the year right now is right around the 10-day moving average. So right around 16,355 to 16,370-ish. I just have a stop just above there, because if we blip back up there, I know I'm wrong. But if we stay down below here, what I'll look for is really the bottom part of this range, because I think we are a two-way trade, just a range bound in the NASDAQ because of the way the Bollinger Bands look. We could easily go back down and test this 15,600-ish area. And right now, what I'm looking at for my risk, not in the full position yet, but as I continue to add to this, it's going to be somewhere around 200 to 300 points of total risk, depending on where all my entries end up coming into play here. And that tells me if I get 200 to 300 points of risk, I'll start to trim that position, because I don't necessarily have a target. Because this is a swing position, I'm just going to try and keep it as long as we stay below the 10-day moving average. Now, if the 10-day moving average keeps coming back down, I'd love to see it get back down below the opening low of the year in the NASDAQ, and then I would just continue to trail it. And if it got above that 10-day, I would just cover the position. Because like I said, the first day of the year could set the tone for, who knows, days, weeks, months. It could come back into play later in the year. We'll keep an eye on it. So I don't necessarily have a target. I'm just going to try and get some risk off and try to trail this as long as potentially this trade works. In my intro, I talked about how I think that most traders get it wrong when talking about adding to losers. I put this tweet out the other day. The problem with blanket statements like "don't add to losers" without context is detrimental to traders. I don't make it as a trader if I don't add to losers, because I scale in. Even when I'm scalping, adding to a loser is adding beyond your risk price and risk amount, not when a trade is against you. Let me take you back to that NASDAQ chart. Here's where I think that most traders get it wrong when they talk about adding to losers. Let's go back to this E-Mini NASDAQ 100 futures chart where I talked about in my NinjaTrader Charting Edge segment how I'm short the E-Mini NASDAQ futures. And I talked about where I was wrong on the trade. I said I'm wrong if we get back above the 10-day moving average or above the opening print for the year, which is right around 16,355. So as of right now, I have a range of execution. I mentioned in my tweet, have context when it comes to adding to losers. I have a range of execution right now, and like I said, in the NinjaTrader Charting Edge, I said I'm going to have around 200 to 300 points of risk when all is said and done in this position because I don't actually know where all my entries are going to be. Why? Well, because when I saw the retest of trying to get back above the opening day low in the NASDAQ and it failed and we started to come back down below the 20-day moving average, I slowly started to add. Now, if we go back up, I might be adding really close to this high or to the low of the first day of the year. Now, maybe the 10-day moving average starts to come back down and I start to add near there because I'm continuing to add to my position in my range of execution. My range of execution is going to be anything below the opening day low of the year. So I might be adding to a trade that is against me. Now, I already know going into this that I can't pick the price perfectly. So I have to look at it as a range of execution. I'm not going to get in a full position right now at roughly, as we were recording, 16,150 because I don't want to throw everything at it right here. We might rally 100 points from here in the NASDAQ, and I still want to be short. So maybe I'll keep some bullets to sell if we start to rally. This is what I mean by without having context about adding to losers. If my first sale is, let's just say 16,200, and we go down and then we get back above 16,200 and I still like the trade and I add to it, that to me is not adding to a loser. I know going in, this is my range of execution. So I might get better opportunities than my original opportunity. This is why I scale. Now, let me take you to another tweet. Everyone always talks about managing risk from the defensive side, which is important, but managing risk is also about understanding when you need to take on more risk. In my experience, successful trading is as much about knowing when to be aggressive as it is being defensive. Let's go back to the NASDAQ chart. Once again, as I've clarified, I have a range of execution. Anything below the low of the first day of the year in the NASDAQ to me is a green light to continue to look for shorts. Where I'm wrong is if we get above opening range, roughly 16,355 in the E-Mini NASDAQ or above the 10-day moving average, then I am wrong on that trade, and that's where I don't add because that would be adding to a loser. But if we continue to show that we can't get above that opening day low and we maybe keep bouncing off the 10-day moving average going lower, I will look to get aggressive. Why? Because the market's proving to me that this idea is working. We have to take the feedback from the market. We can't implement or force what we want to happen. But if something is showing me that it's working, like when I saw this high of the day come right below the opening day low and fail, get right back below the 20-day moving average, in my mind, the market was proving to me what I was looking for was working. Now I know if I continue to see things that I think should happen work, I get aggressive. Now, if we start to keep chopping above the opening day low of the year and it's just not showing really clear that that is working, then I can't be aggressive. But if it's showing to me that it is working, I have to take advantage of that because markets are so much about taking advantage of moments. It's about seizing moments. So just again, to clarify, adding to a loser is not adding to a trade that is against me. It's adding to a trade that is worse than my intended stop price, my risk price. My risk price is all that matters to me. Once that's determined, anywhere in that area below it or above it, long or short, that is my range of execution. If it gets above it, if I'm short, like in this case for the NASDAQ, and I start to add, that is adding to a loser, not adding in the range of execution that I intended to from the beginning. Remember, traders, micro Ether futures are now live at CME Group. They are 1/10 the size of 1 ETH. To learn more, go to cmegroup.com. Traders, as we begin the new trading year here in 2022, one thing that makes us better traders each year is having better situational awareness. Remember the environments that worked well with your strategy and take advantage of those moments. Remember the environments where your strategy didn't work well and have the discipline to step back. Looking back at each and every year of my career, if I just followed this advice I would have gotten better each and every year. Because when you look back at what you did the prior year, it's about weeding out the things you didn't do well and stepping back in the moments where you knew things weren't working well, but you forced it and you lost more money than you wanted to. And it was about taking more advantage of moments when the situations that you knew you really liked and everything's set up and you should have just took more from it. That to me is what helps us grow each and every year. It's always about spending more time at the charts. It's always about studying ourselves more. It's always about getting better at fundamental analysis or anything that we do to become successful traders. But this one thing of just weeding out and stepping back in the moments things aren't working well and really stepping on the gas and taking as much as we can from the moments that are working well, going back to that NASDAQ trade that I talked about in today's show. I've seen this setup so many times that I'm going to try and take as much advantage of this setup. As long as the market's proving to me it's working, I'm going to keep going at it and get aggressive if it makes sense to. And if it doesn't, I'm going to step back. Just by doing that simple mindset into each and every trade makes us better traders each and every year. Traders, I want to hear from you. Your comments help me come up with new content and ideas for shows. I love your questions. I love your comments. Let me know what you thought about today's show. Did you like it? Give me the thumbs up. Did you not like it? Give me the thumbs down. Either way, I want to hear from you and put your comments down below. Never miss an episode of Develop Your Edge and hit that subscribe button. You could also DM me on Twitter at Anthony Crudele. Don't forget to check out Instagram. I talk about this all the time. A lot of different stuff going on Instagram at Anthony C. Crudele. That's a wrap for today. See you next week.